In this video, we will dive into market structure, how to understand the language of price action, the price action works in any time frame and any instrument. We're going to talk about how to identify the proper trend and the trend reversal. Now we can see that today's structure, and by the way, we're looking at S&P 500 and-mini futures. The time frame is 2000 tick chart, which is very similar to 1 minute chart, and we see quite a strong bearish downtrend. Now when I'm looking at the trend, I want to make sense how strong the trend is. This is quite important because each trend is traded slightly differently. If the trend is very strong, you expect weaker bullish corrections and stronger bearish continuation. So this trend right here is very strong. How do I know this? Well, first of all, notice how far down we have moved. So this was quite a big move down. This black line divides the day session from yesterday. So we started straight with bearish push. There is not a single bullish bar for 8 bars working lower, indicating, okay, we may be heading for a good downtrend. A lot of small bars working lower, and notice minimal bullish pullbacks, tiny bullish lags, just a lot of bars working lower. And this blue line, which is the supportive indicator I use, even though we are price action traders and I'm really mainly relying on the pure price action, I have just one supportive indicator on my chart, and prices keep rejecting by the EMA every single time. So this is a strong downtrend. So naturally, this means I need to identify a pattern because market is always heading somewhere and following a pattern. So I'm going to look for a couple swings at the top. Notice I'm going to connect it with this swing right here. It's getting confirmed here and getting confirmed right here. So I'm just going to copy it, put it at the bottom, and I have nicely fitting downtrend. So now I have my structure, which is, if you're a price action trader, which you are supposed to be in my opinion, because indicators are lagging, they show lagging performance, and you can never achieve true consistency with these fancy indicators. They just look good for beginner traders, but you know, you will learn the hard way if you dive into indicator strategies. So now that I know what is the main bias, this is what you always want to understand when you're trading the price action, so you know what kind of direction market is heading. I'm looking for high probability setups to sell. I'm looking for two-leg up pullbacks at the key entry point. This is why I'm looking for these channels, because the trend line is the key entry point and the EMA is one of the key entry points as well. So I'm just going to zoom in a little bit more and notice what we have. Prices broke the channel, and I'm expecting for prices to create new extreme following the trend line rule, because after break of a channel, traders expect for this downtrend to test the lowest low inside the channel. Now, notice the structure of this downtrend. Can you see that at the very beginning, the downtrend was healthy, and at the later stages of the downtrend, the prices are struggling to even reach to the midline. Notice how the downtrend is losing steam. The pushes lower are getting smaller and smaller, and this looks like the market will roll over. It will break, and the stronger bullish correction may follow. So it's a little bit advanced reading of trend, but you can see it's losing a little bit steam, it's rolling over, and you're expecting a little bit stronger bullish correction. This is the lowest low when I'm going to reset the count, because I'm counting for the second entry short. At the key entry point, I have a first entry short, pullback, second entry short. Can I take a second entry short? I cannot, because the uptrend is still in play, and we can get a break and new extreme. I'm not only following the trend line rule for the main channel, but also for the short-term corrections. So this is a second entry short, not interested. And here we have lower high confirmation setup. Now, is this lower high good? I can see why some traders would took it, but it's really not that great. What are the main reasons? Notice the signal bar, bullish body. It's still not quite close enough to the exponential moving average. This is just the first leg, so you may get the second leg up. And you can see loss of momentum here, which is indicating possibly stronger correction. If you took this trade right here because you may be a little bit newer trader who just doesn't know yet how to properly identify loss of momentum here, and if something is iffy here, the fact that the bar is not great, it's not perfectly touching the EMA, if you took it, I can see why. It is an okay-ish setup to take a chance. I'm going to mark it very, very aggressive. You know, I really don't like the single bar, but if your chart, let's say, had better bar, I can see why someone would took it just to expect new extreme. But because of the loss of momentum, there's a chance for second leg. You can see market ready, first leg up, pull back, second leg up. Now here, am I thinking even drawing channel Y like this? Not really. The main channel was down strong, and if the trend down is strong, I'm expecting weaker bullish corrections. I'm really not expecting these bullish trends to continue strongly to the upside. For this reason, I'm drawing it tight. And in fact, as we have new high and we're pushing below EMA, I'm expecting high probability setup. Felt second entry long, because anybody who's going to count for second entry long in downtrend, because we haven't reached new extreme yet, is going to get trapped. So we have new high, first entry long, pullback, second entry long, failure. But it didn't trigger above bullish bar for me to take engulfing. I don't like selling below bullish bar, so there is no real way for me to enter context-wise okay. And then you have a lower high, which didn't trigger. And then you have another failed second entry long right here. But notice at this point on, I have multiple bars stacked next to each other. And this was a really tempting trade. When I was watching this live, my hand was very itchy to go short here because you know you're going to push lower. Bullish correction played out. The downside is going to reach new extreme. And you just have this feeling because bars are closing below EMA. And look how many bulls must have gotten trapped here. Just one tick higher, bearish bar. You know you're going to push lower, but you have rules, systematic rules that you should follow. So that protects you from making mental errors. A very advanced trader can take more subjective setups, but this is very aggressive. Just like the setup feels too aggressive, this is a little bit aggressive as well. But it's a new high, first entry long, second entry long, failure. Come reset, first entry long, second entry long, failure. You really feel you're going to push lower. Downtrend is new extreme according to trendline rule. And notice, lo and behold, we did create new extreme. Perfect price action. So you can see, just following price action rules, I can identify exactly what's happening on the chart, where the correction phase will end, and this is where the push phase will start. Again, new low was formed. We have first entry, multiple matching lows. I'm gonna redraw the channel again. Notice close outside, attempt to create new extreme, failed, and market is pushing lower. Now you have a second entry long possibly, like this. Are you thinking second entry long for new extreme of this uptrend? You're not. And why? Zoom back and take a look. Remember, we identified very early this is a strong downtrend. And a strong downtrend, and still look at a lot of small bars, weak bullish corrections. We had a new low, yes, so the correction may be longer here, but this is a very strong downtrend. You pushed so far down, so you're not looking for reversal unless you have proven trend in the opposite direction. It's always better to be safe, because if you're gonna get proven trend in the opposite direction, you will notice that the market is reversing, and we're gonna see this scenario today as well. So no point for me to just now looking longs. I know the strong downtrends tend to have multiple new extremes, possibly different channels, so I'm not really looking to go short to go long just yet. So we have another congestion, and notice a very similar situation what is happening here. And here we had lower high breakout pullback. I'm not going to mark it as a setup because the signal power was bad, but as a setup price action wise, let me just give these bars a name. Lower high, first second entry long. So here we have congestion, and when I was watching this live, I was expecting lower high breakout pullback just like here, because you have a congestion. Most breakouts of trend ranges will fail. This is what it is. This is a smaller trend range. You can see up, down, but you're fading if we break to the upside, because we want to fade with the direction of the main trend, which is down. If we break lower, we're not buying. In fact, we want to take breakout pullback. We broke lower, came back, tested not only the resistance, but EMA again. At this point, I even drew wider channel. At first, I was playing a little bit tighter channel like this. So, congestion, breakout pullback, lower high, right at the EMA, right at the resistance, and right off the trend line. This is a great, easy high probability setup. The setup I took myself as well. And even if you're going to take a step back, you can see that this bullish correction didn't create new extreme, but bunch of matching highs, lower high and a failed second entry long. So this is a lot of times inclination. There's a wider channel in play. So I even drew a channel like this, because this is typical for strong downtrends. There can be more channels developing. You can see if it's getting confirmed so many times, 1, 2, 3, 4, and eventually 5. But you don't really need a bigger channel at this point on. You can only draw it if you're a little bit unsure after this point, and you're safe as well. So hopefully this makes sense. Don't look for new high. Trend down is too strong. Just look for sells. So congestion, breakout, pullback, lower high. First, decent high probability setup for the day. We have only first entry short. Okay. New low, first entry short. Second entry short, but it's too big. The scalp was almost made. In fact, it was probably made below this bullish bar. You can see what can happen. This is too huge. We're not only interested in huge bars to avoid them because the risk is big, only one of the reasons, but also if you see such a huge bar, so by the time this bearish bar forms, the scalp was already made. So this is why huge bars are not great, because you're entering a little bit too late. And in fact, the trend line is in play, the short-term channel. So this is first leg, pullback, second leg. But the trend down still continues. We have strong downtrend. So notice larger two leg a pullback, and this is very tempting setup because you have first leg pullback, second leg market likes to move in pairs of twos. Uptrend played out with the break, new extreme, new high, but it is not at the key entry point. This is more advanced. You can make case for a couple of these setups, for example, this lower high or this setup right here, but it is definitely a little bit more advanced. You're not really close to key entry point, you're just breaking it. So it's a little bit more advanced, but you can see how price action reacts. Break of this channel, so what do you expect? New extreme, and notice we reach new extreme without any setup. So you can see quite easy price action to follow, but not that many textbook opportunities. Okay, so now I'm going to redraw the channel. Break, new extreme, and now we have a lower high. Now this lower high is confirming the trend line again, but you just reached major new extreme. You have a break, new extreme, a lower high, decent setup, definitely more aggressive because the main challenge is at new extreme. You can expect a little bit stronger bullish reversal, so you want to be a little bit more careful here. But it is confirming the channel from the other side, so aggressive trader, I'm marking this aggressive, can take it because it took one tick higher and strongly closed below EMA, great bearish bar. So there's a chance for big scalp to be made. Now notice what is happening. Prices are strongly pushing to the upside. Okay, so now this is like we talked about. When we talked about this bullish trend, I mentioned you want to go long during a strong downtrend, mainly if you see proven trend in opposite direction. Analyze this tiny little trend. Is this a reversal? No. It is just tiny correction, quickly played out. Is this a reversal? No, just a very slim lag. And notice suddenly how different this entire structure looks. It's much broader, the legs are much stronger, it's pushing too far up. So here you can clearly see that the trend, the uptrend, is more proven than right here or right here. For this reason, here and here, these are just corrections, and you can see by the structure size that this channel is a little bit stronger, and you had new extremes. So you are expecting for prices to reverse because all channels, all downtrends, just at new extreme, even the flatter one. So I'm gonna extend the channel a bit, something like this. And right now I'm looking for high probability setup to go long. We have a new high. Actually, we have micro double top. I cannot really take setup at the EMA because the shortened downtrend is in play. So no way for me to enter. We have first entry short pullback, second entry short failure, but it's a little bit stacked. Prices just are barely creeping higher. Not the cleanest setup, but notice what happened next. Break of this spike in a channel, you spiked up and form a channel. New high, first entry long, pullback, second entry long. So this right here is a second entry long. And notice how EMA held here once, twice, 3 times. Every single bar basically is closing above EMA. So this is a good high probability setup. When I was watching this live, I'm going to show you why I didn't take this setup. I drew my channel, unfortunately, a little bit tighter like this. So I had tiny break here and new high, which means I wanted to wait for high or low, but it ended up being just a tad wider. This is how generally, if you're close, that's more than enough. But today you can see this tiny little change actually was very important. So sometimes we need to draw it really nicely. The clue here is to see that EMA keeps holding every single time, and here it held again, and here it held again. So you have new high, first entry long, second entry long. You expect new high for the uptrend. And notice prices keep pushing higher strongly and strongly. So I'm gonna extend the correction. Now, if you're gonna take a step back and take a look where the bullish trend started, it started right here. There are first 2 swings that are allowing you to draw the channel. This is what I initially drew, but we kept overshooting it so many times. Here again. So I wasn't playing it too much at this point on. I was focusing on this break new high. But you cannot deny how far we have moved and how strong the uptrend was. Notice downtrend working lower. I'm not buying, we're below EMA. Okay, no setup. And we just formed new extreme. So I'm going to draw a new low. First leg down, pull back, second leg down. So you can see this is telling you that the downtrend correction played out. First leg, you have smaller two-legged pullback here. Second leg down, new low formed. So this is indicating that the bearish correction played out, and this entire structure right now is an uptrend and fairly strong, but notice how many times EMA held. So you're identifying the change in structure. Here we started with bearish structure. Every single bullish trend was very weak, so we expected correction. Now you have a break new low, and suddenly notice how far you have already pushed. So this is reversal structure. We have an uptrend working higher, two-legged pullback indicating correction playing out, and you're pushing above EMA. So here, even if you don't have a wider channel, because the downtrend played out and you're pushing above EMA, you're looking for long setups. We're not going to reverse. This is bullish structure. But notice if I'm going to connect the first two swings at the bottom, first swing, second swing, third swing is getting confirmation with a larger two-legged pullback. So it's starting to make sense in price action. And just like if you go back to our couple last videos, we had uptrend structure, larger two-legged pullback with break new low. So you already know what you're expecting. Price action repeats over and over again. High, low, and a failed second entry short above EMA. So if you go back to our last two videos, we had very similar structure where we had bullish structure, larger two-legged pullback, and you know that the correction is playing out due to the size of the uptrend. You can even see third confirmation confirming the channel. So here we have high-low confirmation setup of the visual two-legged pullback and the bounce off the trend line. Very solid bar. And then you're expecting even better setup, which is a failed second entry short, because trend is now up, structure is bullish. So anybody who's going to sell second entry short is most likely going to get trapped. This is where I'm going to reset the count. First entry short, pullback, second entry short. And trader asked me, why is this not second entry short? Remember, below this bar, there is no break lower. Notice prices kept pushing higher. So just because we have bearish bar, that doesn't mean that there is entry short we used to count. Okay, here it is because you have one tick trigger below this bar. So you have low, and you're looking for counts below, for breaks below these bars. So this was the first bar we broke below. So now you have a first entry short pullback, and from the pullback, you're looking for the break below the bars again. So no break below this bar, no break here, no break here, no break below this, and suddenly there's break below this bearish bar. So this is where the second entry short form, new low, first entry short pullback, second entry short, and this right here is a failed second entry short. But notice how far away the body is from the EMA. I don't like this setup too much because a lot of times you can get stopped just to see it go where you thought it was going to go because it is not perfectly touching the EMA. The context is perfect here. I can see if you took it, not a bad setup at all. I just really don't like taking it because it is really far away from EMA. Only the tail is touching it barely. Trend is getting quite strong, so I can see why you're considering taking this. But you generally prefer closing it a little bit closer to the EMA. And then you had high-low confirmation setup. New low, first entry short, second entry short failure, and high-low confirmation setup. And I was actually getting ready to go long above this bar because you're watching high right side like this. You can see EMA holding again, once, twice. Trend line is in play. You're above EMA. You're going to push higher. High-low confirmation setup, big bullish bar, but it didn't trigger above this bar right here. So unfortunately, technically we can't enter. Had there been nice entry, you know, you can go long here if there is a trigger. You want to still study this after the fact because next time you will see this setup, there is going to be a trigger. On this bar, it just stalled. It triggered a little bit later, but great setup context-wise because you can see EMA holding again, follow through by a big bullish bar, and you're in a bullish trend. So quite a decent bar. Okay, market kept pushing higher. Correction to the EMA, count reset, new low, first entry short, pullback, second entry short. Decent setup. Now that I'm looking back, pretty okay setup. You can see nice bar, new low, first entry short, second entry short failure. And at this point on, after you've passed now this area and you continue working higher, this is confirming a very strong trend. Notice how small these bars are, minimal bearish pullbacks. You know, the trend is now resuming here. The stronger trend was just getting established, and by the two-legged confirmation and push above EMA, it was basically confirmed. So from this point right here, you're trading a very strong trend, which you can be a little bit more aggressive with your setups. New high, first entry long, pullback, second entry long, horrible signal bar, bearish bar, and the downtrend is still in play. Even though it worked for a scalp, you have set of rules that you follow. Break, new low formed. And you have a decent bullish bar. And when I'm watching this setup is really nice, but it's not fully closing above the EMA. But like I mentioned, this is right now a very strong trend, and you're risking so little. You're risking so little amount, and you can also kind of reset the count because you have a couple of matching highs here. You're going a little bit sideways, so you can treat it as a first entry long, second entry long, like a first leg down, second leg down. For this reason, I'm going to mark it. If the uptrend is so strong and the risk is so little, I mean, it's pretty much worth it. The downtrend played out with the break new low. You know you're not going to push more lower, most likely. EMA still pointing up, so decent setup to take a chance. Let me take a look. I was on my break here, but it's a decent setup to take a chance if it's this small. Okay, and notice you're coming off the trend channel line. So what is your target? Just like here, most likely to the trend line right here. You're expecting prices to go all the way down here because you're expecting the trend line to be played nicely and healthily. And notice break, new low, perfect price action. The signal bar is not the greatest. I don't think you want to go long just yet, but you can see key entry point is coming into way. And notice you can identify the key entry point early, and this is where the correction phase ended with the break new low and the push phase is starting. This is where you want to buy. It's hard because you see the big momentum down. We didn't even get that strong of a signal bar, but overall context wise, these are the kind of areas where you want to buy because this is where all the smart traders are buying. It's a little bit hard for us as humans to see the correction playing out, the buying this low, because all you see is this. So it may kind of put you into a state of mind that you may be reversing, but this is exactly why you have to follow the price action rules and trust the price action rules. You have to throw the common sense out of the window because common sense is going to be exactly what's going to hinder your ability to perform. So you're expecting high low, but 1, 2, 3, 4, 5 bars stacked. You didn't trigger below this bar and reversed. Double bar entry possibly. It's a little bit too stacked. And then you're expecting the same thing as down here. Felt second entry short. We have new low. First entry short, second entry short. Failure. But no doji. Not even at the EMA. Can we get a little bit of bar? We can't. Market just kept pushing hard. This is how strong the trend was, but you know, this is really ugly setup. The market just kept pushing higher. I'm going to redraw the channel. Break. New extreme. Can we get a high low or fail second entry short? Okay, we cannot. New low. We expect new high because the uptrend needs to get new extreme. Can we get higher low here? And prices are pushing lower. We're not buying. We're below EMA. You can see prices are, every single time they get above EMA, they're failing. So the uptrend was quite strong. So we may have stronger correction. I'm still looking for higher low. And now it's getting a little bit too late. But let's go through this. And nothing is touching the EMA. This is how strong the uptrend is. Yeah, now it's getting very late. So you can see we ended up creating new extreme this very late. But you can see how nicely the price action is truly working. If somebody's telling you that, you know, the trend lines are subjective or that you can't trade based on pure price action, they couldn't be further from the truth. It just requires a little bit screen time and more experience, because this is like language and you need to get used to reading this. You can see two-legged pullback here, two-legged pullback here, micro two-legged pullback here, two-legged pullback here. You can see you didn't get the second leg here, but it's just being a part of overall a larger two-legged pullback. So once you got your main trend, don't focus too much on drawing channels too wide. As long as this channel is in play, as long as the main channel is in play, draw them tight. And here we had quite a decent downtrend. Again, you can see this was the perfect area where you expect for prices to reverse. Same thing here, basically repeat pattern. This is where all the bulls are going to get trapped and you want to take advantage of. So I hope you had a decent trading day. I'm going to talk to you next time.